welcome back to Cambridge House Live. I'm Vanessa Collette here at the Vancouver Resource Investment Conference, and we're joined by Keith Schaefer, the editor and publisher of the Oil and Gas Investments Bulletin. Welcome, Keith. It's great to see you.
Thanks for having me, Vanessa.
Now let's talk and dive right into the obvious topic, oil prices. Did you see this decline coming?
Not anywhere near this severe. I thought the oil price was going to have a big decline this time last year, but then Libyan production went offline, and we had that Middle East thing with the ISIS insurgents. So that put a big fundamental and geopolitical premium into oil for a good chunk of the year. But then, wow, when we saw it correcting, nobody saw it correcting down to $42, $44 a barrel.
Do you think prices have stabilized here?
No. I think that we're still seeing huge volatility. We're seeing $1.20 a barrel swing almost every day. So at $40 a barrel, $45 a barrel, that's a big percentage move.
Right.
So things are not smoothing out yet.
Not stabilizing?
Not stabilizing.
How long do you think that they're going to be staying at these levels?
You know, that is a $64,000 question.
Right.
I think that over the next 8 to 10 weeks, through the middle of spring probably, you're going to see oil stay pretty volatile down at this level, because all the wells that the Americans drilled right before oil collapsed are still coming on stream. So we're not going to see any big production declines probably till the end of March. We should start to see it, but we're already seeing some other good signs. The number of well permits has dropped dramatically. The rig count has now fallen off a cliff.
Yeah.
Contracts are being broken. People are losing their deposits. So it's happening, but there is obviously just a lag time to get that into the actual production numbers.
Now, there's some different theories floating around out there about why this happened. Some people would like to think maybe one person is controlling it. I know the Saudis definitely seems like they had enough and they didn't want to cut their supply. Is this a battle between the Saudi OPEC supply and the U.S. shale supply?
Well, it's funny. The way I look at it is they're not after the shale producers. They're actually after the shale lenders, the bankers.
Oh, okay.
Because what's happening is these guys don't have the ability to grow inside cash flow that fast. So the Saudis are seeing these guys grow by 1 million barrels a day a year for the last 3 years. And finally, you're right, they said enough.
Right.
And so there's no way they could, how would you say it, cut the head of the snake off by going after the producers. So they're going after the bankers and saying, hey, you guys, we're going to lower the price of oil so that you believe you're never going to get your money back.
Right.
And you're going to stop lending. Because even for the industry to keep itself flat at $60 oil, they need about $50 billion a year in new debt. That's a lot of money.
Yeah.
So if the Saudis can convince the bankers to stop lending to the producers, that's where we're going to see the big production cutbacks that should allow oil to come back up.
Right. The best cure for low prices is low prices.
You got it.
Right. Now, what's your investment strategy given all this volatility?
We stay in a lot of cash. I think that the two themes for 2015 are smaller bets and fewer bets. So right now, I don't think it's fair for anyone to say they've got a handle on where the price of oil is going or how fast. So when you think you're excited about something, you buy a little bit and then you keep your stops tight and you wait. But I think for the next 6 to 8 weeks, we should see a bottom in oil over that time.
Right.
And I don't know that sentiment's going to improve, though. And I think the big problem here that no one's really talking about yet is natural gas prices.
Right.
I just think they're going to fall out of bed horribly, like they already have. They've gone from $4 to $2.50 over winter when they should be going the other way. And so as U.S. production just keeps increasing quite a bit faster than demand, I think you see $2 gas in the States and $1 gas in Canada by late spring this year.
I want to talk a little bit more about the demand side. So we've covered the supply side. We all know that supply isn't diminishing, but what's happening in demand? Are North Americans using less energy?
Well, when it comes to oil, yeah, they're using less energy, but marginally less.
Okay.
When you look over the last 10 years, our oil usage is down. In the States, oil usage is down from 29 million barrels and change to 28 million barrels and change. Like, so, I mean, that's for all of North America. So that's not very much.
Right.
But you look at what's happening in Asia, their numbers are increasing dramatically. So it more than makes up for our pretty flat, like North America and Europe are pretty flat on their oil usage to down a little bit, but the rest of the world is up so much.
Right.
You know, it's funny you bring that up because the reality is that over the last 15 years, oil demand has increased very steadily at about 1 million to 1,000,001 barrels a day a year. Production has increased by about 900,000 barrels a day a year. Very consistently, not a lot of variation. It's kind of strange to see how crazy the oil price has been all over the map when you've got those two lines of supply and demand so steady.
Well, and you kind of saw this coming because I think you liquidated a lot of your positions in August, was it?
Started in July, but yeah, August was where we started selling most of it, yep.
How were you able to see that coming?
You know, when you see something coming, it's just an inkling, it's just a sense. It's not something that fundamentally you look at and you go, okay, now it's time. You just, when you watch one market for a long time, you just get a feel for things, and it's okay, now.
Right.
I'd love to try and bottle that, sell that somehow. But
yeah. Now, what are you doing with your investments now? Are you reinvesting in some of these companies that you have seen corrections, or what are you advising?
No, we're still sitting on a lot of cash, and happy to sit on a lot of cash. We're taking small bets on some companies that aren't the producers, but companies that are more around the edges of the energy complex.
Okay. Is it the oilfield services, or?
No, not really the oilfield services. Well, that's not true. Two companies we have been going after, Secure Energy would be the favorite one. They really deal a lot in getting rid of the wastewater in oil wells. And because even though the amount of oil in a well declines year after year, the amount of water in a well increases year after year. So that's a bull market.
Right.
Where time and geology is on your side, that's a good thing.
Now, U.S. shale is probably one of the biggest contributors to the drop in the oil prices that we've seen. So how long do you think the U.S. can continue to produce at these lower levels?
You know, what's interesting, we've seen a real kind of domino effect start to happen, where the number of well permits has gone way down in the last 3 months.
Yeah.
Now the rig count has gone way down in the last 3 months. And so I think we've probably got till the early spring, maybe middle of spring at the latest, before production plateaus in the U.S., and then we should start to see, hopefully, some fairly significant reductions, because the decline rate on these wells is big. Right. So it would make sense that by mid to late Q2, we could see some pretty drastic reductions in oil production.
What's the status on an LNG terminal being built in BC?
Well, right now, you'd have to look at the numbers and say it makes no sense, because oil and gas are kind of trading about the same on a BTU basis, but the companies who are building these, Vanessa, like they're looking out 20, 30 years. And the reality is that gas in North America should stay quite low for a number of years, certainly until the Marcellus peaks. And in oil has to go higher from here. The cost of production is so much higher for the entire world except for Saudi Arabia. So there will be a good difference between oil and gas on an energy basis. And so that's going to incentivize LNG production. So the guys who are going to be building the LNG right now, they're looking 20, 30 years out and understanding there's going to be a couple different cycles there where they'll make a lot of money and parts of that where they won't. So I still see both Shell and Exxon moving ahead.
Okay.
So I'm thinking Shell is going to give us a positive final investment decision December 2015.
Okay.
And then I think the big wild card that no one's really talking about is floating LNG, FLNG, where LNG is done on a much smaller scale on ships. And it costs half the price, it can be turned around twice as fast, and that's what the First Nations are doing up in British Columbia. They're partnering with groups that do the FLNG, thinking that's going to be much cheaper, more environmentally friendly, and faster.
Interesting. I want to touch on the Keystone pipeline just as we wrap up here. It looks like the Nebraska court cleared the way for it. Now there's 2 lawsuits that are being put forth by a couple of landholders. but it still looks like Obama's indicating that he's going to veto it. So if he does in fact veto it, what happens after that?
Well, I think really at that point in time, Canada and everybody else just waits for the next election to see what happens. Sadly, I think our government has kind of bungled it on keeping positive relations with the Obama administration to move this thing forward. And of course, Mr. Obama has his own internal politics, which is really driving this decision.
Right.
He's got a very strong Democratic group out of California that's quite determined to not see this happen for their own reasons. They're heavily invested in renewable energy. So, right now it looks like Canada's going to lose that battle.
The environmental lobby is just too strong. Some people point to Warren Buffett as being, behind all of this because he owns so much of railroads.
Oh, I guess that's possible. Obviously, I would suggest back in the higher price environment that we had right up until 4 months ago, there was room for both the railroads and Keystone.
Right.
But with lower here, definitely you would see some rail volumes taken away with a pipeline.
Great. Well, thank you so much for joining us today, Keith. It was a pleasure having you.
Thanks, Vanessa.